You can't have a person sitting in Cape Town trying to run Kenya.
Welcome to the BIG5D Podcast. We bring you meaningful conversations on the business of African tech. I'm your host, Charles Laughlin, Chief Content Officer for Big5 Digital. Today we're diving deep into the world of payment orchestration with a true industry heavyweight. We recorded this interview with Rahul Jain, the CEO and co-founder of Peach Payments, on stage at the recent BigFive Summit in Cape Town. While we're at it, this episode is brought to you by Telkom, who was the lead sponsor at that summit. At Telkom, possible begins here. Learn more at telkom.co.za. So Peach started in South Africa more than a decade ago and has since exploded. The company now facilitates digital commerce across 9 African countries. But Rahul isn't just looking at where payments are now, he's looking at where they're going. This conversation is a masterclass on scaling in Africa. So let's get into it, and we hope you enjoy our conversation with Rahul Jain. All right, so Rahul, I sort of introduced you there. I was a bit haphazard, but tell us in your words, what is Peach Payments?
So we are a payment service provider. We work with any business or any merchant that wants to sell a product or service, and we give them all the tools, the services that they need to build payments into their customer journeys. So whether you run an app, website, you have a store, we provide all the systems that you need to accept payments from your consumers. We started out of South Africa about 12 years ago, 13 years ago. We are now live in 9 countries on the continent.
How many?
9.
Okay. All on the continent?
All on the continent. So South Africa, Kenya, Mauritius, Eswatini, Cote d'Ivoire, Senegal, Benin, Togo. I just heard today morning that we are going live, or we are going to be processing some merchants in Tanzania. We've got one merchant live in DRC. So it's starting to grow across the continent.
So that growth into DRC, for example, how is that happening?
It's usually merchant-led. Actually DRC, we opened it up for Starlink, that the internet service providers. We see opportunistically some businesses reach out to us and say, hey, can we do this? And are you there in DRC? And, we've partnered with local banks there because we're not there directly.
So you haven't entered the market, but you're there already.
Exactly.
Okay. All right. So 9, I'm sorry, when you said the 9, did you include that one?
No.
Okay. All right. So backing up a little, what did you do before Peach Payments? And what made you and your co-founder decide Peach Payments was the business that was needed in Africa at the time you started it?
So before Peach, I grew up in India. I'm from India, grew up in Delhi, worked in India for a few years, and then went to business school in Spain, in Barcelona at ESA. So I spent 2 years in Barcelona. Then I did part of my MBA at Sloan in Boston at MIT. Ended up working in strategy consulting in Boston for a couple of years.
Which one?
LEK.
Okay.
And then I had done my summer internship between the first and second year of business school in Pretoria. So that's how I came, to South Africa for the first time in 2009. Worked for a boutique VC fund here. And then I met a few people. One of them was then my co-founder. I was in Boston. He called me one day and said, hey, do you want to do payments in Africa? And I was about 1.5 years into...
Was that the first time you heard payments in Africa?
Exactly.
Okay.
And, I remember this was October 2011. He called me. By December, I said, okay, let's do it. January, we started Peach. May 2012, I moved to South Africa.
Okay.
And
so how was the idea?
There wasn't much more thought than that.
Okay. But how was the idea? Payments in Africa, did that instantly send off light bulbs, or how was it pitched to you as an opportunity?
No, I think for me, at that time in 2012, you could already see e-commerce become massive in the US. You had Stripe and Braintree at that time had really taken off. And there was this need for next-gen payment platforms. And you could see them succeed in Western Europe and North America. And then when we looked at Africa, actually when we started Peach, the whole idea was emerging markets. and we wanted to be a emerging markets player, but it takes time to build one country. So we started with South Africa. We got accepted into a incubator that Google ran over here. It was called Umbono back in 2012, 2013. So we did that for 6 months. The opportunity in Africa was like a white space, like no one at that time.
So when you're entering a white space like that, what is your first offering or first product? What do you start with to build into what you are now?
Yeah, so I think we started with, just basic website e-commerce payments and, building platform solution that looked modern, that was responsive. At that time, mobile web was just taking off. So half the websites in South Africa were not responsive.
E-commerce.
Yeah, forget about the payment gateways. So we started with basic things like that, understanding where consumer behavior is heading. We always thought and said, hey, Africa is going to be mobile first. Actually, Africa is mobile only in majority of the traffic.
So you've gone from mobile first to it's probably mobile only.
Exactly.
Definitely.
And then continue to solve for business problems that merchants were facing. Once we got into it, then merchants started to say, hey, what about this? Can you do tokenization? We saw Amazon do the one-click checkout, right? And then we launched one-click checkouts in South Africa in 2014. Mm-hmm. That time Zando was one of our merchants. We just enabled it on their checkout page back in the day. And I think on day one, without prompting, 40 merchants had signed up, or 40 consumers had stored their card with us. And it was just a checkbox that started to show up on Zando, which said, hey, save my card for my next purchase.
Okay, and that was with doing nothing.
And then, a cycle of innovation from there, like constantly looking at what can we do that makes our merchants more successful.
Okay. So, jumping ahead a little bit, I'm always curious, a company like yours, well, I'll put it this way. I once interviewed somebody from MasterCard back at an event in the States quite a few years ago at this point, and I asked this typical, who is your competitor question. His answer was cash. And I'm wondering if you would give a similar answer.
No, so honestly, we are on one side, we're a two-sided marketplace, right? On one side, we aggregate how stores of value that consumers use to pay with. So today in South Africa, you can say card and, on average, South African has 2.5 bank accounts already. Card is like 70% of the volumes. But you go to Kenya, 90% of the volume is M-Pesa, which is one mobile wallet. And then the rest of Africa is somewhere on this continuum between a card heavy to 90% dominated by one store of value. Mm-hmm. There's incredible fragmentation where consumers or users store value. So on average, in a country in Africa, there are 12 different stores of value that consumers are using. In South Africa alone, I can tell you, so you've heard of card, right? MasterCard, Visa, Amex. Now there's buy now, pay laters, PayFlex, Pay Just Now, Happy Pay, Float, right? Then there is RCS. These were store cards that, your game card, your...
Is that like a prepaid card?
No, it's actually private label credit cards.
Okay.
Right? And then you've got MobiCred, which is a digital lender. You've got prepaid vouchers, like one voucher, blue voucher, OTT. These are cash equivalent vouchers. I mean, I've not even ended the list. And that all those are being used to buy something online or in a digital or in store.
Okay. Is your interest in making sure you enable all of those, or is your interest in consolidating those into fewer forms of...
So we aggregate all of those for businesses. So if you want to launch a new store, how are you going to get through 15 different partners? We give you one entry point with everything available. And then on the other side, for each of these players, they don't want to sign up 10,000 different merchants. We aggregate for them. So we are aggregating on both sides of the network. Mm-hmm. And now take that to 9 countries in Africa, that number grows. So when we talk to a global merchant someone, and this is a very American challenge, right? Like, hey, I want to go to Africa. But Africa from the bottom to the top is an 11-hour flight nonstop.
I discovered that the other day.
You don't see that on the map, but it is almost 10 to 11 hours to cross from the tip of Africa to the top of Africa. And there is no single solution, even today. I think there are players trying this. Flutterwave has done a lot in building rails on the continent. There's, OnAfrique, MFS Africa, Dare and the team doing a lot. So there's few players that have started to build one platform that gives you access, and that's what we are trying to do. So if you want to say, hey, I want to access consumers in Africa, you can plug Peach in, and at least I can light up 10 countries for you today.
And who are you selling to mostly? Is it?
See, we are very strong in the enterprise space, so most of our customers are large. When I say large, as in large volume businesses, so Travel Start, we sitting in the space here, we process payments for them. We do, merchants like, I'm trying to think, Sportsman's just gone live with us or is going live with us soon. There's, retailers, digital lenders, almost all buy now, pay later in South Africa runs on top of us. Okay. So whether you use PayFlex or PayJustNow or HappyPay or Float, they all use Peach as the infrastructure to run payments for them. So the way I look at Peach is we are an infrastructure layer. We allow others to build businesses on top of us. Now that could be a fintech, an insurtech, it could be retail, it could be, we've got, honestly, you can think of travel, we've got hotels, we've got property management systems, we've got sports betting, not a big part of our business, but still, it's there. Anyone. So we are kind of hidden behind the scenes, enabling a lot of transactions.
Okay. You just mentioned buy now, pay later, as I chatted with you before this. Topic in other newsletters I've written about somewhat extensively, but not recently. And I'm curious for your assessment of, it was both incredibly popular and rather controversial. I remember, was it Nick Molnar? Now I forgot the name of the company he started, but it was sold. Kind of referred to buy now, pay later as sort of the debit economy, like for people who don't want to take on credit, credit obligations, instead you pay over time. But I think it evolved into, disagree if you want, evolved into something where it became just another way for consumers to abuse, the opportunity to buy without, making the full payment. How did you see that? That conundrum, that issue.
No, I disagree with that to a certain extent. I
Okay.
think, when you look at access to financial services, in general, when we talk of financial inclusion, in some countries, it's a problem of choice. So let's say in the US, you'll be surprised, a big portion of the population still is unbanked. They don't have a bank account. It's not that they don't have access to banking, they choose not to open a bank account. In Africa, the challenge is not of choice, it's of access. There is no equal access for everyone. And credit is one of the hardest things to get access to. So what buy now, pay laters have done, at least what's visible, you can see that in South Africa, but it's been going on in Mauritius. There's a whole different form of credit that operates. In Kenya, there are businesses like Aspire and stuff that are doing, different forms of credit. But in South Africa, buy now, pay later has brought credit to consumers who don't have access to formal credit. Right? I mean, I just tried to open a bank account with one of the banks. It's taken me over a week to get that bank account open. I mean, how much paperwork they asked for. And then they gave me a limit on my credit card for like 20,000 Rand, right? Which doesn't even cover a big TV purchase, for example. So how do consumers smoothen out those cash flow shocks to their purchasing behaviors? I think buy now, pay later allows them to do that.
No, that's
zero
fair.
cost.
I guess my point that I didn't articulate very well was, does it allow the person who can't afford a very expensive pair of shoes to buy the shoes and have the illusion of being able to afford them?
Yeah, I think the affordability and what businesses should be doing to assess affordability is a whole different ballgame. And I think what you're going to see is regulation is going to come in.
Credit.
Well, right now it's not covered by
creditworthiness is becoming a factor.
Yes, exactly. So today, it does factor into the decision making of the buy now, pay laters because they are providing unsecured credit to the consumer. right? So it does factor in, but it's not formally a requirement for them to assess affordability, etc. Maybe it is. I'm not the expert on this space, but I think what will happen is as regulators, the SARB looks at it. I mean, everyone's aware. We engage with all the regulators all the time, and there are new laws coming, there are new regulations coming that are going to formalize some of these sectors. They're going to introduce more burden on the providers to assess for affordability, make sure that we're not over-indebting the consumer, etc. But I think net, it has been incredible for what we've seen in purchase behavior.
Okay. Moving on from that. What I wanted to devote the bulk of this conversation to is sort of the ins and outs of international expansion as a fintech within Africa.
Yeah.
And your recent expansion into Francophone Africa being an example, but you're in 9 markets, so you've done this a few times.
Yeah.
What I really want to understand is, because we had Zach this morning, but we also had him last year, and one of the things he talked about, sort of referencing you, was a lack of willingness for many startups to expand outside of South Africa or outside whatever market they're starting in, and that you've sort of been an exception in your willingness or eagerness to do it. Why do you think it's so important to expand geographically? I mean, it's the question, it could seem obvious, but maybe there's a less obvious answer.
No, I don't think it's important to expand for every business. I think you have to assess what is driving success for your particular venture business, right? So let's take payments as a platform. Like, this is a game of scale, right? With 60 million people in South Africa, we can't achieve massive scale. Like, then we can either go vertically deep. So you start with payments, you then go into credit, then you go into becoming a bank. That's one path you can choose as a fintech.
Product expansion.
Yeah, and you can see that with, a Lisaka buying a bank Zero, and, Lisaka today in their stable has EasyPay, which is bill payments. It has Adumo, which is a PSP. Then it's got, a whole government payment business. And now they've tacked on a bank, right? So that's vertically deep, vertically integrated player. Whereas the direction and the strategy we took is to become a platform for the continent and to go horizontal, but across multiple countries. So we do not extend credit directly. We enable other players to access our merchants, but we are not a credit risk manager. We provide an infrastructure layer that a merchant can plug into, a partner can plug into, and now to replicate that across 9 countries, or there's 54 on the continent, is already hard enough, right? So I think it's important for founders to think of what is right for their business and where does their TAM, SAM, SOM, whatever comes from, right?
Okay. Fair enough.
So for us, it made absolute sense, and that's the direction we chose, that South Africa is not going to be enough. And the opportunity we are going after is to work with businesses to enable payments across multiple countries for them.
So talk us through your criteria for choosing a market, and then from there we'll get into sort of the best practices of expanding outside of your home market.
Yeah, I think choosing markets is a hard one, right? I think in
you must have a checklist.
Yeah, I think you can, if you're a tech founder in South Africa, in Africa, there's 10 countries, or maybe even the big 5 that you can check off, and that's really those are the main markets. South Africa, Nigeria, Ghana, Kenya, Egypt, now a bit of Morocco.
I was about to say Morocco, right?
Yeah, Morocco's coming up, and then maybe Tanzania, depending on the sector. For now,
those are the easier decisions.
Those are the easier decisions, right? But also the ones that are also highly competitive. So if you look at Nigeria, payments is incredibly competitive. So for us, going out of South Africa, the first stop was, our merchants used to ask us. So why we went to Mauritius is because we have a lot of South African businesses that have holdcos in Mauritius. So then they said, hey, can you switch on?
Of Africa,
yeah, and can you switch on payments for me in Mauritius? I'm like, okay. So we started Mauritius. Then someone said, oh, why not Kenya? So we went to Kenya. And then we started to look at Nigeria, Ghana, and we're like, okay, this is crazy. Like, for Peach to go into Nigeria, Greenfield today, it's going to take us years, and it's going to cost us tens of millions of dollars to build a brand and to break into that market, right? The other big thing that people forget is we're a regulated business. we have to be locally present in every market, acquire a local license from a central bank in the country. And that's like getting your wisdom tooth.
I was about to say, how hard is that? Then you just gave us
Let
a
me
metaphor.
explain this. It's like getting your wisdom tooth extracted without anesthesia.
Okay.
Right? That's how hard it is. So we've done this organically. We tried it. We're in Kenya. I think we've been waiting for 3 years for our license.
So
I've been told
more
next
attractive
week
the
we
market,
get
the
it.
hard is the more attractive the market, the harder the regulatory?
No, it's a coin toss.
Okay, could be easy.
Yeah.
Okay.
Mauritius, I think the amount of paperwork we've submitted to the central bank for our license, we could almost become a bank in the country.
But it's a banking haven, right? So
Yeah, but it's just
wouldn't
unbelievable.
that suggest
South Africa, on
a
the other
lighter
hand,
regulatory
has
framework?
zero regulation. Anyone can become a PSP. There is not a single license. There is no regulation. All a bank has to do is sponsor you, and you're a payment service. There are, I think, about 600.
What's the hardest one so far?
So far, Kenya has been the hardest.
Okay, why? I mean, what's...
I don't know. It's just time. It's taken us 3 years.
Okay.
The last time they issued any licenses was January of 2025.
Is it just red tape, or is it the nature of the bureaucracy, or is it the actual regulation itself? Or is it some...
I think regulators on the
brutal, honestly.
continent are facing a lot of change, and then the knee jerk is to just pause everything till they figure stuff out and then switch it on again. And I think we are going through that transition. So what we decided was we've done a few countries organically, and it's been hard. So now what we're going to switch to is just acquire license.
So that's why you switched to the acquisition
Yes.
approach.
Just faster. So we do M&A for 3 reasons.
Because the licenses are already in place?
Yeah.
There's people on the ground already know the local realities, et
Yes.
cetera.
So we'll do an acquisition for one of 3 reasons. We'll either buy access to market, or buy a capability, or scale. So, and we did a
Is that a threefer in West Africa, or what was...
so what we did 2 years ago was we bought a small PSP in Mauritius to buy scale in the country. Then we bought tech for card machines, so like in-store. So we were, for the last 10 years, we were online only. Now we're in-store as well. Instead of building it from
that's
scratch
a
for 2 years,
capabilities acquisition.
we said, hey, let's just buy this. Within 6 months, we were live, right? And then the third one that we've done last year, April, we announced it, was Paydunia in Francophone Africa. That was for access to market. The funny story is we announced the acquisition, I think 3rd or 4th April or something like that. And the next week, the central bank issued a notice to every player in the country to cease operations on 1st of May if they had not received the license. And they had not issued a single license so far. So, and this
Who'd
is
you pay?
literally as we announced it, we were like, what? But luckily it worked out. We were the second.
You already had your license, right?
No one had a license.
Oh, okay, I'm sorry. I thought
But
you already had it because...
everyone was waiting for the central bank to issue the license.
Oh.
So we kind of knew that it's coming. And then we became the second player in the market to get the license. And some of our competitors still don't have a license till today.
Why
So-
did you get one? Just because you were better?
No, honestly, it was credit to the Paydunia founders. That's why we
You had
bought them.
acquired the capability.
Yes, we acquired the access to market. The anecdote was when I was going to Dakar for the first time to like go meet these guys before we, finally agreed on everything, because everything else was on Skype or not Skype, Google Meet or phone until then. And then I just asked around in the community to say, hey, I want to go meet the central bank. Who can I reach out to? And everyone pointed me to the founder of this business. So I said, okay, great. That's, from a basic market check, like we were buying the right player. So I think for us, that's been super useful. The other reason why we chose Francophone is it's semi-hard currency market because the ZOF is pegged to the euro. So what happens in Africa for us is you look at Egypt, you look at Nigeria, South Africa. I mean, now the rand is a bit stronger, but it has depreciated almost, on average, I think, 5 to 10% a year. I mean, for us, you're trying to grow, but you're almost being pulled back by 5 to 10% in each country all the time due to currency fluctuation. So what we've started to do is look at markets which have pegged currencies or semi-hard currencies so that we can at least avoid
More
some of those.
predictability.
Because it's like you're swimming against the tide all the time. So that was another reason. Also in that region, I think 8 countries, 1 central bank, 120 million people, 140 million people live in those 8 countries. So population is a big leading indicator for us of the potential for the market. I mean, that's why Egypt, Nigeria, there are only 4 countries in Africa that have more than 100 million people. That's Egypt, Nigeria, DRC, and Ethiopia. Exactly. So
Are you going to go into Ethiopia?
we'll look at it all the time. I think let's see how the market opens up. Right now, it's too early
Okay.
for
Okay.
us.
So what are some of the, I mean, you've given some very tangible reasons for why you choose one market over another. What are some of the, I don't know if cultural is the right term, what are some of the softer indicators that you look at or have to learn about that to dictate whether a market is easier, difficult to enter, or worth entering, or not worth entering?
I mean, language. I mean, when we looked at Francophone, I don't speak a lick of French.
Nor do I. Well, I learned how to swear in French.
90%, I don't even know that right now.
I'm not going to.
I could do that in Spanish, but not in French. But 90% of our team does not speak French. So that was a big factor we had to consider. But luckily, we had a presence in Mauritius. So over the last 2 years, we've scaled that team up. That's about 20, 30 people now. And they're all bilingual, native, French speaking. So that's helped us. So now on our team engagements, like I was in Dakar now in February, and we took 2 of our team members from Mauritius because we want them to spend more time with the team in Dakar, because the South Africans can't speak to them properly because, I mean, it is hard. Mm-hmm. It is hard communicating when your native language is not the same, right? So for us, our Mauritius presence became almost the secret power that we had, and we've scaled that up a little bit to help bridge our. But culture is a big challenge. I mean, not challenge, but
Other than language, what?
Yeah, I mean, see, you have to think of what are the socioeconomic, cultural factors in Kenya, very different to South Africa, very different to Mauritius, very different to Senegal, to Cote d'Ivoire, to Benin. So when we operate in multiple markets, we go in with the assumption that we don't know this market. And we don't go with that, oh, we know this is how it's done in South Africa. Actually, absolutely not. The first thing I start with is, this is not, what's done in South Africa is not how it will work here. Now, what will work here?
Is that a hard-earned lesson? Have you made that big mistakes? Trying to over-apply what you know?
No, luckily, I think this was anecdotal feedback that we received every time we went into the continent. Mm-hmm. And, this is a bit controversial, but
say it anyway.
The attitude, the narrative is that South Africans come here with this attitude that, hey, this is how we do it in South Africa and this is how it should work. And that immediately puts up barriers. And so we kind of said, hey, we've heard this enough times about South African companies, about South African attitude. And so how do we not do that?
Okay.
So it was just keeping our ears open and hearing what people were telling us. So we kind of went in with the exact opposite. And we have local teams, local country managers. They work across the business. No one's just working on that country, but it's all localized because you can't have a person sitting in Cape Town trying to run Kenya. Right. So even the sales teams roll up to the country manager. They don't report to my sales head in South Africa. We've tried all of that, right? Because it's a completely different way of operating in each country.
Okay. Just going to pause and just, if anyone does want to ask a question, just wave your hand. Get my attention. Otherwise, we'll keep talking for a little bit longer here. I did want to ask just some broader sort of founder-based questions rather than fintech-based questions. Well, everyone has, made mistakes, learned from them. Has there been a product that you started and then realized it was a mistake? And then how did you deal with that if that did happen? If that didn't happen, kudos to you.
Yeah.
But is there an area that then, you could answer both of these, there's also an area that you said, everyone else is doing this, we're not going to, and why?
Yeah, I think, there's a lot of hindsight is 2020. There's a lot of things we think about that, oh, I wish we had done that. So I don't think we've been fortunate that we haven't so far made the wrong bets. But I think what we could have done better is, in some cases, execute a bit more faster. Like I'll tell you, raising capital, we don't raise a lot of money. I think until April 23, we had raised $3 million in our lifetime.
So everyone who says they haven't raised a lot of money could raise a lot of money?
I don't know. I think I suck at fundraising. It's not, my cup of tea. But until April 2023, we had only raised, $3.5 million. We had, the team was over 100, all close to 150 people. We were already in like 4 countries. We were EBITDA positive, running and growing incredibly fast. And then we raised a large round. And I think from that, the learning for me was I think I should have done that 2 years earlier. Because I feel like we missed out on a few opportunities. We could have been a much bigger
raised
business.
earlier, is what you
Yeah.
Okay. All right.
So I feel like, we got into this cycle of, let's not raise and let's...
So the mentality of not raising was you didn't want to take on the cost, essentially, of
cost, dilution,
capital.
also maybe there was distraction and,
well, dilution, I guess that's part of the cost.
Yeah, and I think it's, VC is an interesting pyramid structure, right?
Zach was sitting in this chair last year.
Yeah, I know.
And said no one should have
I tell Zach also, I think it's a Ponzi scheme to a certain extent.
Yeah.
Right? Because you have these certain angels that will invest, they will then bring the next seed investor, then that seed investor brings the next Series A,
That
then
sounds like
everyone sells to the next one, and then either SoftBank or someone's left holding the purse at the top, right? Because we never started over there, we never had those network effects for Peach. So for us to raise a larger round was incredibly hard because nobody knew us. Like nobody was benefiting from investing in us. And we were too late for a regular VC to invest because they want 100x return. They're not going to get 100x. They're probably going to get 20 to 50x, or maybe even they should be happy with 10x because your risk-adjusted return is going to be a lot better. We don't have existential risk. The only risk we have is how big can we be, right? Whereas when you invest at an early stage, it's a 0 or 1. Like you could be, everything I've invested in has gone to 0, right? So that's the risk you take. So I think for us, then private equity investors came in and, now we have Apis Partners, we've got the IFC, South Suez. And now again, I don't think we'll raise.
Never again?
No, never say never.
Okay.
But
what is a trigger for you to raise again?
Now it will be acceleration through acquisitions. So unless an acquisition requires cash, we hopefully by the end of this year, this 2026, we should be fully free cash flow positive, generating cash in the business.
You're going to generate enough cash to make more acquisitions?
Potentially, depending on the size. But I think our ambition is if we are now going to do something, it's going to be a significantly bigger play. And in that case, we'll find the right investors to bankroll it. But otherwise, our view is, I think the world has changed for investments in Africa. Payments is no longer that incredibly high multiple play. I think there's a lot of consolidation that's happening and it's further coming. So we just want
to... You want to be a consolidator now?
Yeah, at a regional level, consolidator, but at a global level, if someone makes the right offer, we're open.
I was about to say, what is your exit path? And you just answered the question, or at least one exit path.
Yeah, I think, we'll come to you, I'll just finish this point. But I think exit path, I think if we build a good business on the continent, and so what do global players care about? They want coverage, so licensed markets, so licensed entities. How many countries can I switch on if they buy us? They want infrastructure rails, like how many stores of value can I bring through my infrastructure that they can plug into theirs, and suddenly they're live in 15 countries in Africa with end-to-end infrastructure, and then quality of revenue. And that's really, the last one is super important because all the multiples are based on that. And quality of revenue can be defined in many ways, but that's something, these are the 3 things we focus on.
Okay.
And then I think buyers will be there. There's enough players.
I'll come over with the microphone. There you go.
So you just coming back to competitors, because I'm just trying to see where you would be benchmarked in the fintech space, because obviously the fintech, in my opinion, I think is quite saturated. So I'd love to hear if your thoughts, if you think it is. Would you say also that Stitch is a competitor with you because they also have like the guardrails set up for the businesses? And then what's next for Peach? What's going to be your differentiator? Where are you evolving to next apart from just market expansion?
Yeah, so I think, yes, Stitch, PayFast, PayU, from a South African context, these are their competitors. There's other players in Kenya. From a regional perspective, Flutterwave, Paystack, these would be similar players to us and competitors. So it's hyper competitive. It's a race to zero, constant margin pressure, constant pricing pressure, hard to differentiate. I think what's happening with AI and tech is that I mean, this is how we operate. I think the value of tech IP is gone to zero. No one is going to buy tech IP. I mean, there's nothing, unless you're inventing something that's patented, I don't think there's any value going to be assigned to that in the future. So how do you operate in a world where no one wants to pay you for the product or service that you want to deliver? And actually the tech is not valuable anymore. What does create value? I think that's what we think about.
What is the answer?
Coverage, licenses, rails, infrastructure, merchants. I think there's a lot of other, value-added layers that you can build on top of processing infrastructure. But I think the bigger thing that's going to happen in the next year or so is user behavior is going to see another fundamental shift. So, and I've always said this, if I look at e-commerce as three legs, right? Discovery, how do you discover a product? Payments, which is how do you actually purchase it? And then delivery, how do you get that product or service to the user that bought it from you, right? So until now, discovery was taken care of by Shopify, Wix, TikTok, Amazon, Takealot. That's where you were discovering products, right? Instagram. So if you're a business going online, you would just open a Shopify store that's already plugged into Instagram and TikTok, and then you can run ads. And so discovery was taken care of largely. There wasn't anyone building something net new in discovery anymore because it's just the hurdles are too high, right? I think discovery is back open completely with agentic commerce because how users will interact with tech and how users will discover products will no longer be through ads or it will be through agents. So the next time you're going to say, hey, Alexa, I need, iron delivered tomorrow in this price range, go find me, what are the three best options? And Alexa, and then there'll be some agentic search, and then you'll say, okay, go buy that for me, right? And then that's done behind the scenes. So what we are building towards is, okay, how do we operate in an agentic commerce world? How does consumer consent get managed? How do we manage payment intent? There's a lot of work going on, but I think discovery is going to fundamentally change, whether it for any product or service. So, and it won't be overnight, it'll be gradual, but I think the predictions or forecasts so far are that about 30% of all US e-commerce will be through agents by 2030, right? So I think there's a lot of value to build over there. And I think in Africa, this will be a land grab, right? Because once you've solved it, it's commoditized from there on. So that's something we want to be, if not the first, but one of the first on the continent to enable for businesses. I think there's, merchant verticals or business verticals that are incredibly deeply integrated through very specific value chains, and how are we playing in that, right? So let's take travel and hospitality. I mean, if you look at a hotel, the number of systems that they're using, from property management to central reservations to channel managers, I think there's an incredible amount of complexity that we can plug into and differentiate. So we've taken a more vertical focused approach. And for us, why it works is if I build a solution for one hotel chain, I'll give you an example. We're working with a global distribution system to build payments for airlines. That same product is used by airlines in each of the countries we operate in. So we solve it for South Africa because one airline came to us. But now my sales team can take that exact same solution that we've spent time building in 9 countries to 9 different airlines and go pitch to them. So for us, building that is going to be super important. And I think that those things don't go away, right? Fighting for the retail merchant for Shopify, I think that's going to be incredibly hard. So more complex value chains and how we can solve for those is what we are thinking.
So you may have touched on this a little bit in some of what you just said, but what metrics do you follow to sort of determine or evaluate how your opportunity is growing or where the next opportunity is in terms of consumer adoption of X, Y, or whatever?
I think the North Star metric for us is GMV, like what's value of payments do we process, and number of transactions. So how many transactions? Because you can be processing for a very high value product. So let's say hotel rooms, again, those are pretty high value transactions. It's interesting if you make percentages, but if you're not making percentages or it's capped, then number of transactions. So those are the two things we look at, and we look at that, every day.
You don't look at more macro factors like, I mentioned cash earlier. I don't know if cash...
For running a business, I mean, every department has their own, key metrics, but like overall North Star, if I would say what Peach looks at for our growth is if our GMV keeps growing and number of transactions keep growing, net will.
I guess I was wondering, what are the inputs to those growth factors?
Well, that depends on industry verticals. I mean, that's a whole...
A different conversation.
Yeah, exactly.
Okay, any last questions? Oh, hold on, let me get the microphone for you, if you don't mind.
You said earlier that there was a couple of opportunities that you wished you executed faster if you raised earlier. What were they?
I think one was Nigeria. I remember going to Nigeria, Lagos in 2013, 2014, when we had, like, these guys, none of these guys were there, Paystack, Flutterwave, and we had everybody ready to work with us. We just didn't have the resources, and we chose to focus on South Africa. So if I really look back, I think that was a big miss. I wish we had the capital at that time to invest properly in Nigeria. So that's one thing I think about. I think some of the product stuff that we've done in the last year and a half, I feel we could have, the land grab would have been a lot better for us if we had done it a couple of years earlier. No, I think not that one, more in the online space. So let me think. Some of the hotel, the hospitality vertical integrations and stuff, we've done them in the last year and a half, but I think we should have done them 2 years ago, like now that I look at the opportunity. But again, it was at that time, we were funding growth from revenue. And it was like, okay, now next, what can we? Whereas what capital brought us was the opportunity to go do parallel a few things at the same time. So, those would be the kind of opportunities which I feel our life would have been a lot easier. Yeah, the fight wouldn't have been this hard.
How do you think about digital? I'll ask this question, then we'll get to Laura. Yeah. How do you feel about digital currencies? How do you think about it? How do you integrate it?
No, super interesting. I think there's a difference between digital currencies and crypto and certain coins and assets. I think fundamentally, again, there's a lot of discussions right now. But what's an interesting outcome is, like, again, if agentic commerce really does become massive, then it's a really good form factor or tool for agents to transact. Because you can have smart contracts, you can have, it's programmable currency at the end of the day. So what you will see is things like stable coins, et cetera, becoming fundamental to how agents will transact. Cross-border, obviously, everyone's spoken.
That's all invisible to the consumer.
That's all, sorry?
That's all essentially invisible to the consumer.
Yeah, and I think for the consumer, it should be seamless, right? Whether you pay... I think at the end of the day, it's a store of value. And how you spend that value should be frictionless for you. And I think right now there's a bit of friction, but it will go away over time. So from a Peach perspective, we think about cross-border, how do we enable businesses to transact globally with ease? We think about agentic, we think about digital, transactions and say, okay, what's going to be the use case? We launched crypto acceptance on our platform. We've got merchants now enabled for Bitcoin, stable coins.
How active is that?
It's small because still today Bitcoin is still a speculative investment tool rather than actually a store of
really a
value.
form.
It's not a form of payment, right? But USDC, USDT, I think those we see because what's happening is people are moving from stable coins to crypto assets back to stable coins and not to fiat. So if there's a pool of value sitting in wallets across in the crypto ecosystem that you can tap into, but it's tiny. I mean, it's not as big, but these are green shoots, I think. So I won't say anyone's breaking down my door saying, Rahul, if you don't do this, we'll leave you. No. But we have to see almost 2 to 3 years ahead and say, if we don't do that now, we'll be too late.
Laura, I'll bring the mic over.
Why don't you see value in tech IP?
I think maybe that's too broad a statement, but let me qualify what I mean,
A little
right?
bit scary.
It is. See, the thing is this. Today, if you look at a platform like Salesforce, right, one of the big moats for them has been that, hey, to replicate all the features, all the details that's built into that platform is incredibly hard for someone to do from scratch. But I think with AI-assisted coding, what we are seeing is, one-person startups, two-person startups. So that moat, that tech IP brought to you is going away very quickly. Secondly, what we're also seeing is a lot of open sourcing, right? So again, I don't see, unless you've built something unique that's, it's MasterCard buying BVNK for, stablecoin infrastructure that they can on-sell to thousands of banks that they sell to. Those are the kind of things that might still be interesting. But even then, it's the overall package that BVNK is built versus just the tech. And that whatever component of value tech used to have in your overall enterprise value, I think that's going to zero.
Do you think that, like you said, you wish that you had got funding earlier? So say that you've got the funding for this idea, do you think there's just more of an advantage if you can actually go to markets first and really strong?
Absolutely. I think I have family members that are single-person startups that have completely built the apps. Product is ready for the first users as a single founder on Lovable, right? So I think you're going to see a lot more prototyping, rapid prototyping. I think you're going to see a lot more competition earlier in the cycle of the startup. But to mature it, I've felt from my experience, getting 0 to 1 was a lot easier. 1 to 10 was hard. Now for Peach, our goal is, how do I build this into a $100 million revenue business? That is incredibly hard because that's when everything gets tested. So the 0 to 1 journey gets compressed very quickly. What will still be valuable is the maturity and the scale that you can build to become 100. But look at all these AI businesses. I think now you have the fastest ramp up to $100 million in ARR than ever in history.
The other night I gave a short talk about the solopreneur unicorn, the Sam Altman concept of somebody on their own is going to create $1 billion business. A bit hyperbolic perhaps,
It's
or is
already
it?
happening. Maybe not on their own. 4 or 5 people teams are already sitting at $100 million ARR businesses. Printing cash, they don't need to raise, but they need to raise to build scale because now scale's definition has changed, right? So I think in certain spaces, it will become, at least the fintech, I don't think tech will play a big role. I think it'll be something other than. So maybe, it's true for certain SaaS. I mean, you've seen the route, but because I've had a South African VC tell me someone pitched them a zero competitor that 2 founders built in 3 months using vibe coding. which is an online accounting platform. So you're going to see a lot more of this. A lot more specialized tools solving very specific problems.
And you can fail very quickly as well. And using this model, I mean, fast failure is kind of a, if it's a bad idea, you want to find that out quickly.
Yeah, absolutely.
Yeah.
It doesn't cost you so much. Failure is cheaper now, effectively.
That's kind of what I meant, yeah.
Yeah, and you're also going to have a lot of subscale players. So I think M&A will grow because someone will start to consolidate subscale players. I don't know if you guys read, but Jeff Bezos is raising a $100 billion fund to buy out manufacturing businesses, to redo them with robotics and AI, right?
I didn't think he was going to do it with...
Yeah, it's not like manufacturing is finished, no, but it's just going to be reinvented.
Yeah.
And some people are going to succeed in that.
Last chance, otherwise I'm going to ask, one more. I'll bring the mic again. You guys are making me walk.
So you've spoken a lot about tech IP, but often what I don't hear, especially from kind of CA or tech kind of leaders, are the value of the brand and the strength that it has in the marketplace. What are your thoughts on that?
Yeah, I think that's something that's super valuable, right? But that value comes from solving problems. Because what's also happening is, at least I feel there's no loyalty in the market, right? It's, hey, if the next person can solve my problem for today, I'm switching. So at least we've seen this, right? Back in the day, switching costs were very high for a business. You sign a merchant up, it's hard for them to redo the dev and to change. Today, everything is plug and play, modular. You click a button, Peach is out, Payfast is in. You click a button, Xero's out, Sage is in. So switching costs have gone down. And I think, that's the brand, there is value in scale because you have your momentum. And yeah, but I can tell you, we have to constantly innovate. Like, part of the brand is also that you're at the leading edge of innovation all the time, and that is super hard. So I think there will be few businesses who will be able to pull that off, whether it's culture, organization, the people that they have in their teams. I think those things will still matter. But you can win with brand, for sure.
Final question. Is there a future for Peach payments outside of Africa?
Yeah, I'm sure.
Do you envision a future for Peach payments outside of Africa?
I think we're starting to think about it. I do think that there's still enough problems to solve on the continent, which create, good returns for us from an effort, time, money spent. If you think of the rest of the world, like, we have to come across a problem that resonates, that we are solving and no one else, or at least that's one of the best solutions, and then that will grow. So I think our thinking is that we'll find some of these problems in the markets we operate in, and one day one of our products or services will resonate across the globe, and I think that's our way.
You get pulled into it in a sense, potentially?
No, I think it's not just blindly saying I need to expand to the US or to Europe
no,
or
I
to
meant
India.
Something another market discovers.
Finding the thing that we are. So we have a couple of things that we're thinking about, which I think can play a global role. But, at our core, we are still focused on Africa.
Okay, fair enough. All right, I think we'll end it there. Rahul, this has been a pleasure. Thank you so much.
Thanks, Charles.
Please join me in thanking Rahul. Thanks for joining the BIG5D Podcast. I'm your host, Charles Laughlin. The show is a production of Big5 Digital. If you'd like to book a guest or sponsor an episode, write to us at big5dtv@gmail.com. See you next time for more conversations about the business of African tech.